Dear students, good morning. I have come with a new module, Final Accounts Module 13. This will be the last module, and I want to tell you that each module I have explained two adjustments each. So totally we have learned 26 adjustments. So those who have attended online classes, please make use of these modules and learn from this. So in this module, I am going to explain two adjustments, interest on drawings and interest on capital. So interest on drawings. So when the proprietor is withdrawing money from the business, we have to give interest for that. We have to provide interest for that. So because it's an income for the firm. So some firms, they charge interest on proprietor's drawings because proprietor is using that for his personal use. So what will be the adjustment? I told you it's an income, so it will be credited to profit and loss account. Similarly, it will be subtracted from capital along with drawings. So first problem we'll see, from the following trial balance of Mr. N, prepare the final accounts for the year ending 31/3/22. Cash in hand 5,400, cash at bank 26,300, purchases 4,06,750. Sales 9,87,800. Returns inwards. This is sales returns 6,800. Returns outwards. This is purchase returns 5,000. So I told you sales is a credit balance. If you want to enter the returns, it will be debit balance. Purchases is a debit balance. If you want to return, it will be a credit balance. Please remember that. Wages 1,04,800. Fuel and power 47,300. Carriage on sales 32,000. Carriage on purchases. Carriage on purchases will be direct expenditure. It will be debited to trading account. Carriage on sales is a indirect expenditure. It will be debited to profit and loss account. Carriage on purchases is 20,400. Opening stock 57,600. Buildings 3 lakhs. Freehold land 1 lakh. Machinery 2 lakh. Patent 75,000. So from buildings to patents, it's an item for balance sheet. Salaries 1,50,000, general expenses 30,000, insurance 6,000, drawings 52,450, capital 7,10,000, debtors 1,45,000, creditors 63,000. Total of the trial balance 17,65,800. Two additional information: closing stock was valued at rupees 68,000. Provide 5% interest on drawings. When it's coming as an adjustment, it will be two adjustments will be there. Closing stock, you have already learned that, credited to trading account, asset in the balance sheet. 5% interest on drawings. It's an income. It will be credited to profit and loss account, subtracted from capital along with drawings. These are the adjustments. So if you see the trading and profit and loss account of Mr. N for the year ending 31/3/22. Opening stock 57,600 to purchases 4,06,750. Less returns 5,000. So outer column 4,01,750. To wages 1,04,800. To fuel and power 47,300. To carriage on purchases 20,400. By sales 9,87,800. Less returns 6,800. So outer column 9,81,000. By closing stock 68,000. So total of the trading account, credit side is higher 10,49,000. We'll write the same total on both sides and we will balance it. So you're getting gross profit as the balancing figure 4,17,150. So now we will prepare the profit and loss account by transferring gross profit to credit side of the profit and loss account. So profit and loss account of Mr. N for the year ending 31/3/22. By gross profit brought down 4,17,150. By interest on drawings 2,623. Total is 4,19,773. That is the total of the credit side. To carriage on sales debit side 32,000. To salaries 1,50,000. To general expenses 30,000. To insurance 6,000. So here also credit side is higher. So when you are balancing, you will get to net profit transfer to capital account. That is the balancing figure 2,01,773. Now you have to prepare the balance sheet. Balance sheet of Mr. N as on 31/3/22. Capital 7,10,000 and net profit 2,01,773. Total 9,11,773. Less drawings 52,450. So you will get 8,59,323. Less interest on drawings 2,623. Outer column 8,56,700. Creditors 63,000. Asset side buildings 3 lakhs. Freehold land 1 lakh. Machinery 2 lakh. Patent 75,000. Debtors 1,45,000. Cash in hand 5,400. Cash at bank 26,300. Closing stock 68,000. So total of the balance sheet 9,19,700. Now the second adjustment, that is interest on capital. See, or just opposite of the interest on drawings. Interest on drawings is an expense for the firm. Interest on interest on drawings is an income for the firm, whereas interest on capital is an expense for the firm. Because when a proprietor is bringing capital, if he would have invested the same amount in a bank or in any other investment, he will get some returns. So some firms' policy is to provide interest on capital provided by the proprietor. So it will be an expense for the firm. So if two adjustments I want to explain, sometimes it will appear only in the trial balance. So it will be debited to profit and loss account. Why debited? It's an expense for the firm. Whereas interest on drawings is an income, we will credit to profit and loss account. Now second adjustment, if it's mentioned in the additional information, that meaning two adjustments should come. One in the trading and profit and loss account and one in the balance sheet. So if it's coming in the adjustment, it will be debited to profit and loss account and it will be a liability in the balance sheet. That means it's a payable to the proprietor. So problem 2, from the following trial balance of Mr. P, prepare the final accounts for the year ending 31/3/22. Furniture and fitting 6,400, motor vehicle 62,500, building 75,000, capital account 1,25,000, bad debts 1,250, provision for bad debts 2,000, sundry debtors and creditors. Debtors will be the debit balance 38,000, creditors will be the 25,000 credit balance. Opening stock 34,600. Purchases and sales. Purchases is debit balance, sales is credit balance. So purchases 54,750, sales 1,54,500. Bank overdraft 28,500. Sales and purchase returns. So sales returns will be debit because sales is a credit balance. When you're returning, you have to reverse the entry. That meaning sales returns will be 2,000. It will be debit balance. Similarly, purchases is a debit balance. So when you want to return it, it will be a credit balance. So purchase returns 1,250. Advertising 4,500. Interest 1,180. Commission, it's a credit balance. So it will come to credit side of the profit and loss account. 3,750. Cash 6,500. Taxes and insurance 12,500. General expenses 7,820. Salaries 33,000. Total of the trial balance 3,40,000. Additional information, closing stock was valued at rupees 32,500. Provide 5% interest on capital. So this we will debit to profit and loss account and it will be a liability in the balance sheet. So trading and profit and loss account of Mr. P for the year ending 31/3/22. To opening stock 34,600. To purchases, inner column 54,750. Less returns 1,250. Outer column 53,500. By sales 1,54,500. Less returns 2,000. Outer column 1,52,500. By closing stock 32,500. Total of the trading account 1,85,000. Credit side is higher. So you're getting gross profit 96,900 as the balancing figure. Now you'll start the profit and loss account by transferring the gross profit to profit and loss account. So profit and loss account of Mr. P for the year ending 31/3/22. By gross profit brought down 96,900. By commission received 3,750. By bad debts provision, old provision is 2,000 less the bad debts 1,250. So the 750 more is there. So it's coming in the credit balance. See, some problems we have seen, bad debts provision, old will be there, new will be more than that. So you will debit to profit and loss account. Here it is less. So 750. So next debit side, to advertising 4,500, to interest 1,180, to taxes and insurance 12,500, to general expenses 7,820, To salaries 33,000. To interest on capital 6,250. So here also credit side is higher, 1 lakh 1,400. When you're balancing, you're getting 36,150 as net profit. This we will transfer to capital account. So balance sheet of Mr. P as on 31/3/22, capital 1,25,000 and net profit 36,150. So total 1,61,150. Add interest on capital 6,250. Outer column 1,67,400. Creditors 25,000. Bank overdraft 28,500. Furniture and fitting 6,400. Motor vehicle 62,500. Building 75,000. Debtors 38,000. Closing stock 32,500. Cash 6,500. So total of the liability, total of the asset side 2,90,900. Total of the asset side also 2,90,900. So the balance sheet is tallied and our calculation is correct. So two adjustments we have learned in this module: interest on drawings and interest on capital. So interest on drawings is an income for the firm. It will be credited to profit and loss account. It will be subtracted from capital along with drawings. Interest on capital is an expense for the firm. It will be debited to profit and loss account and it will be a liability for the balance sheet. So 26 adjustments I have explained with the help of 13 modules, 2 adjustments each. Now each adjustment, all these 26 adjustments I am explaining as short videos and I will be posting it soon. So stay tuned, happy learning, do well and get good marks for the examination. My sincere best wishes for all of you to get good marks. Thank you.